Hi, today is 8th of October and I wish all my subscribers and viewers a very happy Dussehra. Now today I will like to talk about something very interesting. This is regarding the Elliott wave principle. Now there's a lot of talk about the Elliott wave principle either being too subjective, that means not very clear and differing of where people have different viewpoints of the same chart. Also, there is a talk about it being very difficult. But here I would like to make a presentation that if you can just take a part of the relative theory and master it, even a child can do it. It's so simple. For example, let us look at the flat correction. So what do you mean by a flat correction? Where we have a three-wave decline followed by a three-wave rise and then a five-wave decline to complete the correction. The point where this becomes interesting is this B wave. Once this B wave finishes, we can easily trade the C wave to the downside, which is a very tradable move. How do you know that you are in a flat correction while the price action is developing? The dead giveaway is that when there is a double top formation and this rise to the double top is three waves. That is all you need to know. Once you see that, you are alert. You don't go short here right away. No, you wait for confirming price action. And the confirming price action will definitely come when this B wave low of the B is taken out. The other way to trade it is to go long once your C wave is done. Now, the C wave can be equal to here A wave, or it can go and make a lower low, which will be 1.6 times A. That is also possible. Once the C wave is finished, you can be pretty much sure that this prevailing trend will resume. And that is a much powerful trade to work on. So now let us look at some examples. Now this is a chart of NCC. Here you can see that it went up in A, B and C three waves. The origin of A and B are almost the same, and this was a flat correction. If you see the Fibonacci proportions, it should be proportional. Let us have a look. Aha, see that 1.61 times C is equal to A. The stock stopped exactly at that line and reversed sharply. It also went to the previous fourth wave here. So all this was a very high probability that this is a flat correction. But do we short at this top? Probably not. We waited for this to take out this high of wave A. That confirms that this whole structure is a three-wave flat correction, and then you can sell NCC once this level is taken out and see how it is falling like anybody's business. Now this is HDFC Bank. HDFC Bank had this massive rally, and then everybody was disturbed at why is it falling. Now look at this. This rally is A, B and C three waves to a double top. So this certainly looks like a flat, and if this is really a flat, then it's likely to come down very sharply to a minimum of around 1070. So actually it was yesterday that we bought puts on NCC, HDFC Bank, and we are holding this even though everybody else is bullish on the stock. Now, can we be wrong? Yes, we can be wrong. If this chart were to turn around and move up and make five waves, then this is not a flat and this will be a new impulse. So we are aware of that possibility, and that's why our stop losses need to be maintained. But as of now, we are going with the flat count because this is certainly a three-wave rise to a double top. Now this is Manappuram Finance. Here again you can see this stock fell in three waves for wave A, a three wave rise for wave B. Again, you can see this is a triangle B and C, and this made a double top. So, as I teach all my students, double top with a three wave to the top is a fantastic shorting opportunity, and that is where you can make some money. So here again, you have a three wave to a double top, and we have bought some puts yesterday in Manappuram, expecting this decline to go all the way down to minimum of the origin of wave A, which will be 108. There's a possibility it can go beyond that, but this is pretty good enough for us. So I mean another three wave decline, another three wave rise to a top in Manappuram is a very good setup. Now, if this turns around and moves to newer highs, this turns into a five wave move, and we are no longer calling this a flat. Now, this is Bank Nifty. Again, a three wave rise A, B, and C, and this has now started to fall, and this A wave top has been taken out. So, this is classically a flat correction of this whole move, and therefore we are looking at further downside to minimum below these levels. So, this is how, my friends and my students, if you can count to three and see that these three waves uh, could be traded in different ways. Either you can go long once this B wave is over for the C, or once the whole structure is over, then you can go short. So it's a very, very potent pattern, very simple to see and understand and take action on. So that is all for today. Take care. Bye bye, folks.